Welcome to For Advisors by Advisors. I'm your host, Evan J. Mayer. Today's topic, we're going to discuss I-bonds. Are they right for clients? Should you recommend them? And how to add them to your practice. I started using I-bonds about a year ago. Never really thought much about an I-bond. I remember the grandmother of my wife said, I have some I-bonds coming due. And I remember this was 13 years ago. And I was like, okay, I got to look these up. I didn't quite understand what I-bonds were. And in recent history, they haven't really been paying good interest rates. I-bonds kind of came onto the scene for me towards the end of last year. I actually wrote an article, which is on worth.com, called The Return of the I-bond. And back then, the I-bond was paying 7.12%. Today, they're paying 9.62%. So pretty good yield for a risk-free asset. Now, when you say the word risk-free, meaning, if I held to maturity, I'm going to get my principal back out, right? There's obviously risks with anything, liquidity risks and all the other risks that we know as financial planners. But as far as the client is concerned, the risk of the principal is nil. So gonna give you what I know about them, the benefits, the negatives. I actually never bought an I-bond until about 3 months ago. I finally pulled the trigger. I didn't see the value in just tying up $10,000, having a separate account to have to do that. But I'll discuss that in a moment. First and foremost, they're federally guaranteed. The interest rate is paid monthly, but they compound semi-annually. And the current interest rate, like I said, is 9.62%. Now, they can change that every 6 months. And the bond will continue to go for 30 years. Okay, so it is a 30-year bond. However, after 5 years, you can take it out without any kind of penalty on the interest. The good news is that even if you don't want to necessarily commit to a 5-year bond, as long as you leave it in there for 1 year, the penalty is only 3 months of interest. So at 9.62% yield, to take a 3-month penalty on that interest 1 year from now, you're still going to be netting well above 5%. Obviously it's a good yield, for that short term of an instrument. It's a great concept. So they're definitely valuable. Why do financial advisors not necessarily talk about them a lot? Well, first and foremost, you can't do them inside of a brokerage account. So let's get that out of the way. What's the biggest pain in the butt about an I-bond? You got to open a Treasury Direct account. Now you can do that online is the easiest way. My first time doing it was just about 3 months ago. It's tedious. It's not as easy as opening a brokerage account, believe it or not. It's actually harder. You got to remember your account number every time you log in. So you got to have that plus the username plus the password. You also, don't have it on your brokerage statement. So you can't buy it through a firm. So many financial advisors might not be offering it to clients because, one, you're technically taking assets outside of your book of business. But at the end of the day, it's the right thing to do for the client if they're willing to go through the exercise of buying the I-bond. So the minimum is $25. Okay. The maximum is $10,000 per social per calendar year. Okay. So you can buy multiple I-bonds at different times. You can also buy them for your children. You can buy them for your wife. So you do have the ability to buy more than 10,000, but you're going to have to open up multiple accounts. Again, I found the online a little tedious. So for older clients that you might be dealing with that are not computer savvy, they're going to find it probably a lot more tedious than I did. Again, it's not hard. It's just you gotta look for where to buy. It's just not very easy. I would say that. Since they are federally federal bonds, you do not have to pay state and local taxes on those. Just like a treasury, you will have to pay federal income tax. Okay, there is a way to avoid federal income tax on the I-bond if they are used for educational expenses, the assets when you withdraw them. Obviously check with your tax professional about that, but then it could be federally tax-free as well. Okay, so as of now, you would pay federal taxes, no state and local taxes. They do compound semi-annually, as I said, and you can do it with your tax refund assets too. So there is a way to do that. I normally owe as being a business owner. I normally don't get a tax refund. And if I do, I probably credit it to future taxes. I found it just easier to go on and just open up the account than to use my tax refund. You're still limited to the dollar amount that I did discuss. Again, the minimum $25, the maximum $10,000 per calendar year. Should you recommend I-bonds to clients? 100% you should explain I-bonds to clients, and you should tell them the pros and the cons. The pros of doing it, number one, you're doing the right thing for your client. If you don't offer every piece of advice that's the right thing for your client, you're not doing the right thing. As far as the assets you may lose on an AUM status, again, it depends. If your clients are ultra small, low net worth clients, then the $10,000, coming out for each client might affect your practice. For me, it's 0.001. It doesn't affect AUM. It doesn't affect anything along those lines. But again, it's the right thing to do for your client, so you should do it, in my opinion, or at least make sure that you're explaining the I-bond. The article I wrote kind of does that in a very short, 3-paragraph thing, which you can always forward to your clients if you choose. What's the negative of doing it? It's the same negative that reason why I didn't do it when I wrote the article back in 2021. I didn't want to open up a separate account through Treasury Direct. I didn't want to, the thought of money outside of my overall portfolio, as somebody that likes to have their hands on their money. Like if it's in a brokerage account and it's in a structured note or longer term type of instrument where I might not have immediate liquidity, at least I see it every day. It's there and I know it's there. Again, mental accounting, would be the behavioral definition of that concept, but having it somewhere else, not in your possession, that I don't like. And then the bottom line is that for $10,000, the interest rate, of 9.62%, if that stays for the full year, that's, $962 of interest. It's great on $10,000. But it's not like, you're not going to create an income strategy using I-bonds for your clients, right? Again, low net worth, maybe, high net worth and affluent, probably not. My recommendation would be to at least have the discussion with clients. I think it's a smart idea. It's a concept. They should know about it. Many of them probably, that watch CNBC or Bloomberg or Fox Business News, might have mentioned it to you. It's good to get familiar with it. I do like the fact that I went through the process because I know now it's not easy. I did not know that prior. I would have figured out it was quite easy. But very simple instruments, very, very, very easy to recommend to clients. And like I said, knowledge is power. Giving that knowledge to your clients that they exist is a huge thing. And anytime that I can find something beneficial for clients outside of the services that we offer, I think it's a benefit to at least educating them that those type of instruments exist. We don't actually open the accounts for clients. We obviously wouldn't do that. That's fully on them, and they should know what they're getting involved in. But at the end of the day, knowledge is power. So hope you enjoyed today's podcast. If you have any questions, feel free to email me at evan@fortunawealth.com. That's FORTUNAWEALTH.com. Love your feedback, good, bad, indifferent. Again, I'm no expert on I-bonds, so if I said something that is not 100% by the book, and you have some information to advise me on them, love to know the knowledge that other advisors have, and hopefully you enjoyed the podcast, and you can also touch base with me on LinkedIn. Hope you have a great day.